The stock market's crashing. Coronavirus is taking over. It's the end of the world. Is it time to start buying stocks long term? Time to start investing in the stock market? Well, that idea probably surprises most people who are thinking about investing in the stock market. Now, a lot of people, when they first start investing, when they see red, they think, oh no, it's bad, the market's crashing, it's time to either get out or it's time to just stay away. But the one thing that I want to stress here in this video is that when you see red, it's time to buy. Today we're talking about the overall stock market and when you should start investing in the market and when you should be greedy and all of that fun stuff. Right here, let's go. That when the market is red, that's when I want to be investing for a couple different reasons. First off, I'm getting a discount on a stock that I would have already bought at a higher price. Two, I'm getting a discount at a lower price than I would have already paid for that stock. And three, I'm getting a discount for that stock. Now, it might sound counterproductive to be buying stocks when they're crashing, but you have to understand here that the market moves in cycles. We're gonna have a pullback. Every once in a while, there's gonna be a pullback. But overall, long term, I'm talking long term here, the market has went higher. And that's one of the things that a lot of people get messed up with. They get the FOMO when the market's at an all-time high. The news, everybody's talking about how the market's at an all-time high. Everybody's like, man, I'm missing out. I gotta buy now. I gotta jump into the market when it's at an all-time high because it's gonna go higher, right? And then as soon as the market starts to crash, everyone's like, oh wow, this is a terrible time to invest in the market. It's crashing. I don't want to be buying any stock when the market is crashing, or should I? Obviously, you don't want to go out and overextend yourself. If you've got $10,000 in your bank account, I'm not telling you that you should go out and put $10,000 into the market today. Obviously, there's always a chance the market go lower until we bounce and go back higher at some point here. But if you're looking to invest long term, I'm talking big cap stocks, big companies, Facebook, Apple, Amazon, Google, big time companies, there's never a better time than to buy when the market is red. And you've got to get that idea out of your head that you're like, hey, oh my gosh, the market's going higher and higher. I need to buy. And instead, your theory is, wow, the market's crashing. I'm getting an amazing discount on a stock that I already wanted to buy anyway. And a lot of people will ask me, they'll say, hey, what stock should I buy? What should I do when I first start investing? And I'm telling you right now, the best thing you could do is walk around your house, right? Walk around your house and see what products you use every day in your life. Do you use Apple phones? Do you use Amazon? Do you use a certain grocery store? What is it that you're using every day in your life? And that'll give you a pretty good idea of what's popular in the market and what is a good investment. Now, again, you don't want to just go out and buy every single stock you can, but you want to make long-term solid investments here. You can invest in the overall indices. There's plenty of opportunities with ETFs and things like that. And you can invest overall in the market and have an exposure to multiple things. You can find different ETFs for different types of sectors. You have the technology sector, you have the consumer goods sector, you have the medical and the energy sector, you have multiple sectors, the financial sector. There's multiple sectors that you can invest in, and the best thing to do is to diversify. Obviously, you don't want to go out and just only buy Facebook stock, and you don't only just want to buy Amazon stock. You want to diversify, but you've got to start thinking like an investor and not just as a FOMO crazy retail trader. That's why most people end up losing money when they actively manage their own portfolios, is because they get FOMO. And when I'm talking about FOMO, I'm talking about like Amazon. Just the other day, Amazon went from like $1,800 to $2,100. And I'm sure a lot of that was shorts covering and things like that, just the overall market pushing it higher. But in general, I'm sure people also were like, man, Amazon finally broke over $2,000. I think I want to buy a share. Instead of buying Amazon when it was crashing or buying a stock when it's pulling back with the overall market. Now, like I said earlier, it's natural for the overall market to have pullbacks. You know, nothing just goes straight up. Well, the S&P 500 has basically gone straight up for quite some time, but we're finally getting a decent pullback, and I think there's going to be some really good opportunities to buy here for for the next 4 years long term. And like I've talked about in other videos, long-term investing, you're looking at an overall bigger picture here. You're not just like, hey, I want to buy today for the dip and I want to try to sell tomorrow for the rip. That's a day trading idea. The idea here is that you're buying long-term to hold and to grow your overall net worth. These are not stocks you're just buying and trading constantly. These are stocks that you're investing in as an investor. And why would you not want to buy a discounted stock? A stock like Apple, which pulls back, it's an opportunity to buy. That's not an opportunity to be scared, and you don't want to wait for Apple to go back to all-time high and then end up buying, which a lot of people end up doing in the market. And that's why a lot of people end up losing money in the market, because they end up buying at the top and selling at the bottom, if that makes sense. Some guy probably bought a bunch of stocks recently at the all-time highs. The market pulls back. Now he's like, man, I just lost $1,000. I got to get out. And he ends up getting out. He ends up selling everything. And then guess what? A week from now, it goes back to the initial price that he bought at. And then he's like, it's going back to all-time high. So he buys again, and it does it all. It's like a cycle. And you've got to understand that just because the market is red does not mean that it's a bad time to buy stocks. It's the best time to buy stocks. Obviously, you don't want to just go out and buy, like I said earlier, you don't want to just buy every single stock that's red. You want to buy key companies, large companies that have potential, long-term potential. We're investing long-term here. But when you see the headlines about the market crashing, you see the headlines about viruses and all these things going on, it tends to scare people. It tends to make them fearful of investing, and they end up selling if they're already invested because they think the market's going to go lower, instead of being like, hey, this might be a really good opportunity to buy more stock, to buy more shares of a company that I already was invested in or I already support. Warren Buffett has a saying that goes, when the market is red, it's time to buy. When people are being fearful, it's time to be greedy in the market. And overall, that plan has worked for quite some time for him because the guy's got a lot of money and he's made a lot of money in the market. So it's working for him. Let's probably borrow that idea from Warren Buffett. Like I said, I'm going to be looking for some long-term opportunities as we do kind of pull back here and look for some more pullback. I'm totally fine with buying lower and lower. And like I said, this is a long-term opportunity. This is not like me buying today for a swing trade, but really overall looking for the next like 5-year plan. If I can buy the dip, hold for 5 years, well, I should be doing pretty good, right? I should be doing pretty good in the long run. Long run, we're buying today, we're holding for that long home run type return. So, like I said, when the market's red, buy. When the market's really, really green, just look at your profits. It's that simple.